is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program. I'm Cesar Delgado on today. I visited with Lance Zimmerman at the NAF convention in Kansas City from last week. I talked with Lance how is the level of concerns about the consumer budget with beef and Mexican cattle, and I visited with Noami Blomn from Total Farm Marketing in Kansas City about the grains markets with the stocks ending with the World Supply and Demand Report. This been back roads of Illinois. I'm joining with Noami Blomn from Total Farm Marketing at the NFB convention in Kansas City. Otherwise glad to have you on today at the convention. What's new with the corn markets right after the harvest season?
Yeah, so the corn markets are still deciding where that U.S. yield is at. The USDA said we're at 186 for yield, but I think a lot of people in the industry think that yield number needs to come down. So we might have tighter supply, but it might take until the January USDA report before we know. But we have really good demand. We've got strong export demand, and we have strong ethanol demand. So it feels like the corn market is on the verge of trying to trade higher and go higher. But we just need a little bit more news to make that happen.
What was your thoughts on this crop report from Friday?
Well, I thought it was typical USDA, kick the can down the road and not give us any new answers or information. But usually the November WASDE report doesn't have a lot of fresh news on it. The USDA has a tendency to wait until the January report, and then they do a bigger update on production and a bigger update on supply and demand. So that's what we're going to be waiting for. And we're just kind of in a little bit of a wait-and-see pattern, and we're waiting, of course, to see about Chinese export demand of our soybeans.
Right.
Noami, how is the seasonal markets for right now in the markets?
Well, that's a good question, and it's an important question. For the seasonals, for corn and soybeans and wheat, a lot of times there's a very simple price pullback lower into Thanksgiving. But then as we start to go towards Christmas, the seasonals can suggest, now of course it doesn't happen every year, but the seasonals would suggest that prices work higher then into Christmas and into the new year.
Have a good one. You too.
How is the fundamentals on January beans for this morning?
Well, so the January soybeans today, they actually finished the day sharply lower. And the fundamentals haven't shifted too much. We got good news that China did come in and buy beans, but we had been pricing that expectation in for about a week. And so now when it finally came to fruition, everybody said, oh, that's old news. So then the expression buy the rumor, sell the fact kicked in. And that's part of the reason why the beans were down today. Not that there was negative news, just not a lot of big new bullish news.
You know that we finished with the harvest season in the Midwest, and the government shutdown is playing out without the crop production and world supply and demand report from the Department of Agriculture. Do you think about it with non-starter?
Yeah, so it was challenging when we didn't have those government reports, and it wasn't just the WASDE, the weekly export sales, the commitment of traders reports. And so now that the government has reopened, those reports are coming out, but they're delayed. And so some of that information we're still not going to get until like late December or January. So it almost still feels like we have our hands tied. Even though the government is open, the information is still slow to get to the marketplace.
How about the technical buying in the beans?
Yeah, so we did see the technical buying come in for the last couple weeks. We saw the funds exit some of those short positions and become buyers. And so that technical rally pushed the market about 75 cents higher. And then we hit the next upside objective and resistance on charts. And so now we're maybe going to see a little bit of a price correction lower after we had this big rally. But I do think any correction we have is going to be a buying opportunity again. But we just need to see how deep the correction potentially is first.
We are here in Kansas City. I am wondering, could you tell our audience that what's latest in the trade front from Halloween?
Here in Kansas City at the NAFB. So looking ahead as we wrap up holidays and head into new holiday seasons, we're going to be looking to see where demand is for American agricultural products. We're going to be looking to see where that ultimately the harvest yield ends up. And again, we're going to be really focused on watching the export market. And as long as we're in Kansas City, we should probably talk a little bit about beef, right? Yeah, so that beef market had a real big rally, of course, but for the past month, a really significant price pullback. There's a cattle on feed report on Friday, so we'll keep an eye out for that to see what information can come.
What is your thoughts on the CFTC?
Oh, yeah, so the commitment of traders reports. So that we just found out that those reports now finally are going to be released, but they are only getting released 2 or 3 at a week to try to get caught up, and we won't get caught up until January. So we're still at risk of knowing for sure where the fund position is or isn't. And then the question is, by the time we know all the old news, will they already be adjusting their position and changing it? So it's still feels like we're blind in the industry in a lot of ways.
Do you have any final thoughts on this harvest season?
I guess the only thing I want to remind producers who might be listening is that, the soybean market has had a good $1 rally. So this is a good opportunity to make some cash sales. And for producers who are storing grain in the bin, specifically for corn, just be mindful that there's a potential seasonal, for the short-term pullback lower into the end of November. But then a lot of times there can be a rally in winter, and it's usually in conjunction with that January USDA report or South American weather. But if you're going to be selling grain in the winter, the time frame that you're going to want to watch out for traditionally is mid-January into mid-February. That's a great time for the winter rally to potentially occur and for farmers to sell some of that grain that's in their bin.
Thanks, Noami. Great to see you at the convention.
So great to see you too and to meet you in person.
We've been talking with Noami Blomn from Total Farm Marketing at the NFB convention in Kansas City on back roads of Illinois. We were talking about the cattle markets with these markets for right now with Lance Zimmerman at the NAFB convention in Kansas City. Lance, how are you today? And I am glad you're here with us for today at the convention.
Yeah, doing great. It's been a busy morning talking to a lot of folks about the beef industry, but it's an exciting time to talk about the beef industry.
Good to hear that. Lance, what is your thoughts on this cattle markets for this year with these prices?
Yeah, this market's been unprecedented. We have cattle producers making record profits this year, mostly due to exceptional demand. There's been a lot of discussion of supply in the marketplace and declining cattle supplies. And that's absolutely the case, but due to weight increases of these cattle, more days on feed, strong imports, per capita supplies have actually been largely steady. And so a lot of the record high prices have come due to just record consumer demand for beef, which that's allowed cattle prices to stay strong and should remain supportive to the market for the next several years.
What is your concern about supply and demand?
Yeah, I think the biggest thing that we're talking about now relative to supply is as we go forward, those supplies are going to decline. For the last 6 years, supplies have been largely steady, around 58 to 59 pounds of beef consumed per person in the U.S. As we go forward, we're going to start to see cow-calf producers respond to these higher prices and good margins by retaining more heifers. As they do that, those heifers won't be in the beef supply and will draw down supplies a little bit more. And so tighter supplies with this exceptional demand means prices are going to continue to inch higher. And obviously there's some concerns in Washington, D.C. about beef prices today for consumers. But consumers are saying it's expensive. We get that, but it's worth it. And that's why demand has been as strong as it has been. And so as we go forward, we're going to have to continue to wrestle with some of the chaos around the high consumer beef prices and the sound bites that are going to come from that. But overall, cattle fundamentals are very good. And the cattle cycle still works. And producers are still going to rebuild the herd. And that's an exciting thing to be participating in right now. Right now, the beef industry is one of the most profitable across food and ag, and that's expected to stay true for the next 2 years.
Of course. We were talking about the new worm outbreak for this year with all of the markets, and counting on the border is closing. How concerned about the slaughter numbers of Mexican cattle?
Yeah, one of the things that's interesting, and the cattle we import from Mexico, they're typically lighter weight cattle. They're typically older for their weight. When we bring them in, they're typically on feed around 300 days. And so as you alluded to, the market's been on again, off again, and mostly off relative to Mexican cattle imports for the last 12 months. As a result of that, considering the days on feed, really the decline of that lack of Mexican supply is only going to start to hit the market right now in this fourth quarter window, and especially as we look to next year. And so the market priced that in very well, I think, in the calf and feeder cattle markets as those feed yard inventories tightened. But in terms of the fed cattle market and the related wholesale and retail beef markets, I think those price increases that'll come from that shortage in supply are yet to come. And so as we go forward, the screwworm limitations are going to continue to be felt in this market going forward, at least through 2026. Maybe even deeper if the border remains closed.
What is your position on Mexican cattle in the markets?
Yeah, as we look at it, the Mexican cattle supply is very regionally important, especially to our southern feed yards. That product serves a very valuable role in fueling feed yard inventories in Texas, Arizona, California, even up into Colorado, and then other places to a lesser degree. The cattle that we get from Mexico are some of the highest quality of cattle produced in Mexico. As they come into the U.S. market, they're a little bit lower quality relative to our domestic supply, but that's become a really important part of our supply story over the years. It's become a very North American market in the U.S. even when we look at imports from both Canada and Mexico. And so especially at this point in the cycle where our numbers are relatively tight, that million head a year that we get out of Mexico has been pretty consistent for the last decade. And so losing out on that has really added to some of the pain of a lot of our feed yard producers and grazers in that southern cattle ranching and feeding territory. And so I get the pain that they're feeling right now, but we also have to protect our animal health and our food supply. And so making sure that when we reopen that border that we have some assurances that screwworm challenges are under control remains pretty important to the health of our greater industry.
Sure. I'm just curious about the consumer budget with beef side to it. Could we meet somewhere between the economic downturn to have no supply? What is your position on that?
Yeah, there's been a lot of discussion right now about the high beef prices and concern being a celebration protein, and demand has benefited from that.
Yes.
Do you have any final thoughts about the fundamentals with the feeder cattle?
Yeah, as we go forward, feeder cattle supplies are going to be tighter. I already mentioned the Mexico supply situation. The other side of it is we've been through a decline in the cow herd for the last several years. The highs in the cow herd were in 2019. We do seem to have stopped liquidation completely in its tracks. And now we need to lean towards heifer retention. And unfortunately, that means a heifer calf that was born this year and kept in the cow herd to become a future mama cow isn't going to produce additional beef that's going to replace her until September of 2028. And so that means feeder cattle supplies are going to continue to inch tighter as we retain those heifers and keep them on farms and ranches. But it should mean future supply growth and better opportunities for demand and cow herd profitability going forward. And that's an exciting thing to be talking about.
Where people can find more information on your services?
Yeah, the simplest thing they can do is Google Rabo Bank Knowledge, and that's where we house all of our research from our Rabo Bank research team in food and ag research. And so they can sign up there for reports. They can see both exclusive reports and ones free to the public, and that's where they can find information from me and my team.
I could probably have 4 or 5 minutes for you. Great, Scott. Sure. Hey, listen, do you want to talk on the American soybean people?
Thanks, Lance. I hope that you are enjoying your day at the NAF convention.
Thank you. I definitely am, and I hope the same for you.
Lance Zimmerman from Rabo Bank at the NAF convention in Kansas City. I am Cesar Delgado for Back Roads of Illinois.